What is good, guys? It's Rey-Jay back with another video, and in this one I'm going to be talking about the markets, break down SPY, the Nasdaq, the QQQs, and the futures, break down why the markets could get a bit of a pullback, maybe cool down a little bit tomorrow before we do see a bullish continuation, why the market does have a chance to actually squeeze tomorrow. And before I break anything down about this, before I get into any more details, I do have to mention a couple of things before starting. Firstly, I'm not a financial planner. Make sure you take none of this as financial advice whatsoever. And also, if you guys can, please smash the like button if you want to see more videos like this. It not only benefits me, it benefits the entire community as a whole. And the last things, if you guys can, please check out the Moomoo link down below in the description. If you sign up for Moomoo, the link down below, and deposit $100 into the account, you're guaranteed 7 free stocks plus free level 2 data. It's a limited time offer. The offer ends in just 4 weeks. Make sure you check it out before they run out. With that out of the way, let's get on with the video. So when it comes to SPY, I want to break down some very important things. One of the things I mentioned to you guys is the fact that there was a possibility that the market would actually come down and get a really nice bounce. That's exactly what happened today. We crashed to about 392. We actually gapped down. Then we saw the market rally. It closes in just a couple of minutes. We're at 397, almost 398 right now. So now what do I see happening? Well, let's talk about why I said this in the beginning. And that's because of the fact that the market was forming a lower low relative to this low. The RSI, you can see from like right here, the RSI was at 34 during this low. When SPY made a lower low, the RSI actually made a higher low at 38. So the RSI got higher, the market got lower, forming a divergence, and we got a breakout because of that. And we're likely going to see the market try to continue to push up. Now, max pain for tomorrow is going to be at 398 for SPY. I also want to note that we have a lot of calls and puts out of the money, and the market makers are going to benefit if they hold the market up. This means that we're likely going to see pain in the options chain, and I do believe that the market could actually continue to hold these levels, maybe even push up tomorrow a little bit more. I say this because the market wants there to be pain. The market makers want there to be pain for a lot of the puts out there and the calls, and they're likely going to try to hold the market up. Now, what this tells me is right now the market's continuing to hold pretty well. We are seeing momentum shift in favor of the bulls. And on the daily, the overall bearish momentum is actually weakening a bit, but it doesn't change the overall picture, which I've been talking about for a while. That is the market potentially bouncing and then continuing to come down before anything else like that. That's what I'm essentially still seeing. And I do believe we're going to likely see a continuation to the downside for the medium term. I do believe that there's more downside to come. But before the downside comes, right, we're most likely going to see the market bounce. We're most likely going to see the market try to get back to the 400s. What I'm thinking is tomorrow, I believe we have a lot of Fed speakers coming out. And I think that the Fed speakers might actually cause the market might initially try to push up again, and we're likely going to test this resistance. We have heavy resistance all the way up around 400. We might try to test 400, get a rejection, close above where we are right now, once again for another green day. But I do believe something like that's likely going to happen. For the dollar index, I want to note that the dollar is once again trading kind of sideways, not really doing too much, but it's not necessarily on as strong of an uptrend as it was before, and that's obviously a good sign for the bulls temporarily. It does increase the odds of a bullish outcome. I mentioned to you guys that because of the fact that, or if Tesla ended up not necessarily meeting all expectations during Investor Day, this thing would likely crash. We're down almost 6%. Once again, it took a bit of a hit, but it did try to actually rebound a little bit. So if Tesla does break above 193.96, like 194-ish, if we can break and hold that tomorrow, maybe going into next week, there's a chance Tesla's going to try to fill this gap and come all the way back to the low 200s. But if Tesla comes down to this demand zone and it fails at not just 187 but also 186, then it's going to crash all the way down to about 182 to 180. If it fails and comes all the way down to fill the gap down here in the 180s. All right, so we're kind of in the middle for Tesla. But because of the fact that the market could bounce, I think there's an increased probability that Tesla might slowly uptrend. It's going to be a lot weak, but very slow. and it's going to try to fill this gap. That's what my guess is going to be. But I think it's going to be very slow. Like I said, I don't expect Tesla to be very strong. NIO had deliveries, pretty strong deliveries, all right, for the month of February. That's despite the bad earnings that came out. NIO has actually made a bit of a comeback. We could see this thing try to fill this gap all the way up around the high nines if the market continues to bounce, which I believe it most likely will. Triple Q, nice breakout from the triple Q. And in my opinion, it actually bounced almost exactly where I mentioned. I was talking about this 288 level. And look at where it bounced. It bounced off 288.38. Very close. It's continuing to go up. The next key level is around this 295 to 296 zone. That's going to be a very important level. If we break it, this thing is going to fly all the way up and get closer to 300. And we do have a gap up here around 300. There's a chance it might try to go all the way up to that gap level, or at least the gap resistance over the next couple of trading days if we do get confirmation of this. I mentioned to you all, the VIX was showing weakness, and that's because the market was starting to show some strength. I mentioned to you all the VIX would likely get to the 19s. That's exactly what happened. Now the VIX is going to likely try to form a bottom. It might slowly start to trade sideways, but I could actually see it continuing to downtrend just a little bit. But the bigger picture is the VIX has a breakout already. It could even be forming another like falling wedge on top of this one. Completely normal. The VIX will break out and turn bullish in the future couple of weeks. You know, it is going to do that. But before this thing starts to explode, it's likely going to continue to downtrend just a little bit. Finally, for Apple, I'm seeing something very similar. I mentioned to everyone, Apple would likely come all the way down to about 144 and try to bounce. We bounced off 143.9. Now that Apple got a bit of a bounce, it might continue to try to uptrend and fill this gap up here around the 147 zone. If it does that, that could be bullish for the markets, and it could even continue to go from there. Now on, let's see, the 5-minute time frame, I want to double check where that gap is. I don't think we filled it yet. Let me double check though. Yeah, we haven't fully filled this gap up here. We did gap down just yesterday. So Apple might try to fill this gap around 147 very soon. That's a very important level. If it fills the gap, it could enter a range between 147 to 149. And if that happens, once again, bullish for the stock market. Finally, Amazon's not looking that strong, in my opinion. Nice rebound off 90. It might get a rejection off this 92 level and try to fight for it. It could reject and then trade sideways, but eventually it might slowly try to uptrend, get back to this 94 level. It could slowly do it, but I'm not seeing too much strength on Amazon's end. Like I showed you guys, we have a big downtrend. It could have bounced off 90, but once again, it's not looking very strong to me. I don't expect it to be as bullish as other ETFs or stocks out there. We do have this gap around the 95 area, so if it does continue going, we need to break above 93. If we could break an old 93, there's a chance it might try to get to 95 for the gap fill. Finally, for the 10-year Treasury yield, this thing is still climbing. Very interesting, huh? But we do have a gap down below here, so it might start downtrending to fill this gap, get back to about 40 flat, maybe retest 40. If it does that, that could be bullish for the stock market. We also have another gap down here around 38, another one all the way down around like the 38.3 area. So we do have quite a few gaps between 38 and 40. They might start to get filled slowly and could be bullish for the markets temporarily. All right, so that's basically what I have for this video. For tomorrow, I'm seeing the market potentially having another green day. I think market makers might try to artificially pump the markets to cause pain amongst the options holders and try to make money. And despite that, we know what the drill is. Yes, the market can get a bounce. Yes, but we're likely going to see something else very interesting, and that is more downside for the medium term. I do believe there's going to be more downside later, but for the time being, the market makers might try to hold the markets up. So anyways, thank you all so much for listening. Have an absolutely incredible rest of the day. I'll definitely see you guys in the next one. The market to the moon, because the long-term future is still very bright, and peace out.